Howdy there, folks. Welcome into today's video. Boy, do we have a lot to get into in this one here today. We're going to talk about the markets. We're going to talk about certain stocks, certain moves going on out there, opportunities, things like that. But before we get into that, I want to actually go a little bigger picture here, okay, on some stuff I'm definitely seeing in the market right now, some activity and whatnot. And kind of draw this to your guys' attention because I think this is very important. It's something I've been spending some time on the past 24, 48 hours and really thinking about on a deeper level that I want to kind of share with you guys in terms of the kind of the psychology of the market and where people are at kind of mentally in this market right now as investors. So anyways, appreciate you guys. Thanks so much for being here. Thanks for being subscribed to the channel. I appreciate each and every one of you. Also, if you're looking to join us in the Patreon, that is pinned comment down there. I just made moves in there about an hour or two ago, and I did post the moves up as I do every single week in terms of stocks I'm buying, selling, plus you get to support the channel. It's pretty awesome. Alrighty, guys. First thing up here, I saw this week. I can't remember if somebody posted this inside the private stock group's Discord chat or where I saw this, okay? But it was interesting, right? And it was such a true statement. And I think I even ended up doing an Instagram story about this, right? But optimism sounds like you're like a sales pitch. Pessimism sounds like you're trying to help you. You know, someone's trying to help you, right? And it is 100% true, right? Optimism and being optimistic, those sorts of things, it does sound like a sales pitch, right? And to be optimistic, I mean, my gosh, it's like, think about being an entrepreneur, for instance. Let's say, for example, right? You've got to be optimistic or you're never going to make it. There's no one that's ever made it to be successful in life who wasn't optimistic about their future and where they're going and those sorts of things, right? In pessimism, automatically sounds like you're trying to help someone, right? It just on a human psychological level, the way our brains are wired, that's the way that sounds like, right? And so what happens there definitely can correlate into the market. And in the past year, for instance, we've never seen it throughout the history of the AI investor sentiment where this many people are, let's just call it this least bullish on the market. You can go all the way back to the 1980s and look at all their historical data, and you won't find another year period where there's this many times of less than 20% of investors bullish on the market. All back here in April 2022, less than 20% of investors bullish on the market. May 26, 2022, less than 20%. Obviously, in the June timeframe, the summer timeframe, I mean, look at those numbers there, less than 20% of people bullish, right? Back in September, several weeks in a row where less than 20% of investors were bullish. And here recently, this most recent week, less than 20% of investors bullish on the market for the next 6 months. Absolutely extraordinary, right? And you see that, and you got to think to yourself, this is very, very important for everybody watching this, right? You got to think to yourself, there's one of two scenarios. Either this is literally the worst time ever to be an investor and just like, you know, there's only like bad stuff, there's only downside, there's no potential good things, there's no potential upside, right? It's that scenario, or it could be a scenario that something is changing with investor psychology around the market that is leading investors to become more and more just pessimistic in their views of kind of everything. And I also think about it in terms of society, in pessimism in society, in you know, let's call it generations now versus maybe previous generations, right? And I think of like social media, for instance, right? And I mean, if you go on Instagram or Twitter or anywhere, right, what are you bombarded with? You're bombarded with negativity. I mean, it's just quite obvious, right? Like people are always pointing, trying to cancel somebody. Obviously, if you look at pictures, you know, and like people always got to bring out some sort of negative. Like there's always got to be some sort of negative with all this stuff. It's quite interesting, right? I mean, I'll give you an example. I was on Instagram. This was like last week, and Devontae Adams, he plays for the Raiders, right? I was looking at his profile, and he's got a picture of him and his wife, and his wife's white, right? And just so many comments about like, oh, you know, black players only like, you know, white women or white, it's just like all this like negative stuff. And I'm just like, it's just, that's the way society's like wired now, is like, it's always like pessimistic. It's always bad. And it's unfortunate, right? And you go on Twitter and it's like, this person's canceled, this person's canceled, this person's, you know, doing this and that. And it's just like, man, we're in a bad spot as kind of a society at this point in time. And I think it's really being brought upon, through social media. You really get to see it in such a massive, massive, epic way, right? And I also think about it on the political side. And I think about like leadership, and I think about President of the United States, always a very important position, really around confidence, in my opinion. Like, obviously, presidents, they do a lot of things, right? But in my opinion, like, the most impactful thing a president does is give the people confidence, right? And if I think about coming off of Obama, and I think about coming off Trump and Obama both gave their segments of people a lot of confidence and a lot to be like proud of, and like, oh my gosh, and so obviously Obama represented that on the Democratic side, and Trump definitely represented that on the Republican side, right? A lot of people were just very optimistic when Trump got in office and while he was in office, right? And just like, it's going to be brighter days ahead, we're going to get this country back on track. When Obama, it was the same exact situation, just more from the Democrat side, right? About optimism and the hope for the future. And if I think about obviously the current president of the United States, Biden, I mean, let's just be honest. I don't think anybody's really that inspired by him. He's not an Obama, certainly not an Obama, let's be honest. And he's certainly no Trump. And so people are just kind of like, he's there to do a job. And he was kind of a vote to like get the, because a lot of people obviously hated Trump, so they just wanted to get him out of office, right? And unfortunately, I think that kind of bleeds into like market psychology, because, you look at the president of the United States and it's like, that's the leader of the show and the leader of the market is seen, which, it is what it is. And so I just think that's an important factor that maybe is to play there, right? And I think I showed this in a video earlier this week, right? It was just a random poll I came across on YouTube, and it was right before CPI was going to come out, and it was like somebody did a poll, will CPI come in hot tomorrow? Almost 3,000 people voted, and almost everybody said CPI is going to come in hot, right? And it just goes to this overwhelming feeling in the market of, think about this for a moment, think about this, okay? It goes to this overwhelming feeling of the market of like, it's just going to go bad, only bad things happen, don't be optimistic. And maybe it has something to do, think about this for a moment. Maybe it has something to do with the fact that we came off such an incredibly bullish market in 2021 into just like such a horrible market in 2022, where it just seemed like everything that could go bad was going bad, right? And so in 2023, everybody's just automatically have the assumption like 2022 is bad, right? And if I even think about like retail investors, I think about the type of content retail investors have really been attracted to over the past 6 to 12 months, it's really been pessimistic, negative content, to be quite frank. Like, if I think about a lot of the YouTube channels that have been doing tremendous over the past, especially 6 to 9 months, it's a lot of the channels that are like, all the banks are going to fail, and, all the flames and the thumbnails and just everything's always negative, right? It's the end of the world. Everybody's going to lose their job except for you. You're not going to lose your job. Everybody else is going to lose their job, right? Isn't that funny how that works? But, it's just like that's the psychology of the market, right? Pessimism, bad news, bearishness, everything's got to come from a pessimistic kind of lens. And anything that's not from that pessimistic lens is like a false, it can't be real or something like that, right? So it's really, really fascinating market we're in at this point in time. And strange. I would call it strange too, okay? Now, I want to take you into something that I think is important for everybody watching this video right now. But first, I need to move into the garage because this computer is getting hot. Alrighty, folks, move to the garage. I got to say, I've never heard this computer get that loud before. I don't know if the fans were spinning or what was going on in this MacBook Pro here, but that baby was hot, okay? Peter Lynch, Ben Graham, Warren Buffett, great investors, great, just some of the best you could ever listen to, right? I wish more people read some of their books over time, right? But there's an issue. A lot of people, they think that's too much work, so they'd rather watch TikTok videos than actually read a book nowadays. That's unfortunate. But I wish more people would read some of these books. And I also wish that a lot of people actually retain the knowledge they're being taught and actually practiced what these gentlemen preach. Because what these gentlemen tell you time and time again is you're not going to be able to time out this market. You have to stay optimistic. But people will hear this stuff from these great investors that have tremendously more success than anybody else, right? And they'll say to themselves, you know what? I think this time's different. I think my philosophy's better. I think, trying to time out the market, and I'll go bullish when I feel everything's good again and those sorts of things. And they go against like everything they're taught by these people that have been through the markets before. These people have invested during inflationary times before, deflationary in times, recessions, maybe not depressions, but pretty close to that, right? They've invested during different turmoil in the market, right? All these different scenarios, and they're going to tell you this specific set of strategies, and people still go away from them because somehow these people think they're smarter than Warren Buffett. They think they're smarter than Peter Lynch, right? But in reality, they're just scared. They're just scared. And they'll make excuses on why they should do this or do that, rather than take advantage of deals in the market when those deals are presented to themselves, right? And they'll take a pessimistic angle rather than an optimistic angle when they're told time and time again that is the wrong angle to take on the market, right? And so it's unfortunate, but I just wish people read some of those books, and I just wish they actually stuck to what those folks teach, because what those folks teach is going to put you in a lot better position over time. And anytime I've gone against any of the principles I've learned in all the different great books over time, I can tell you I've been bitten, right? Unprofitable stocks, buying way too many unprofitable stocks. One thing if you own one or two, but when you own 5, 6, 7, now you're setting yourself up for, some huge losses if the market doesn't quite go your way, right? And so anytime I've gone against many of their teachings, I've been bitten personally in a huge way. So you will be too. But people think they're smarter, and they think like, but really they're just scared. They're just scared, and it's unfortunate, okay? Now, there's some shocking things happening in the market now at this point in time I need to point out to you guys, okay? Some unbelievable stuff. The first unbelievable thing right now that's going on is this is the past week for the market, okay? Check it out. The Nasdaq was up over 4.4% this week, while the Russell was down over 2.6%. That's over a 7 percentage point difference between the Nasdaq and the Russell. I've been doing this for 15 years. I don't ever remember a week where there was a 7% difference between the Russell 2000 and the Nasdaq. That, to be quite frank, is shocking to me. Absolutely shocking. Maybe it has something to do with the banking system and maybe some of the Russell 2000 stocks, maybe some of the regional bank players, something like that. But I got to say, I don't ever remember a 7 percentage point difference. Like usually the Russell and Nasdaq are going to somewhat move together. Maybe they're on a weekly basis. Maybe there's a 0.5% difference, maybe a 1.5% difference. 7 percentage points in a week for those two indexes, that doesn't happen. Like ever, pretty much, okay? But it happened this week. I would say that's very shocking to kind of see what just played out there, okay? Now, I want to take you through a few stocks here, okay? And there's a very important point I have to make in regards to this, okay? What you're looking at is Advanced Micro Devices, AMD stock, okay? And I basically wanted to show you where these stocks were at in kind of the October, November, December timeframe versus where some of these stocks are at now versus the market, okay? So if we go back to October for AMD stock, right, and where the Dow's gone since then, AMD stock has over 10x'd the Dow Jones Industrial Average over the past number of months now, at this point in time, with a 73% return versus the Dow's a 7% return. Insane, right? Look at a stock like NVIDIA over that same time frame. 7% return for the Dow, 128% for NVIDIA. 128%. And that's consistent buying in this stock along that chart is about as beautiful as a chart you're going to get. That's just consistent buying, taking advantage, right? If you look at a stock like Meta over the last number of months, 118% gain versus the Dow in that same time frame from November, right, is down. We're in a stock pickers market, folks. We're in a haves and have-nots market. This is not just a market where, there's never been a market where you could just always get a great return in the indexes. And to be quite frank, like why do people like Peter Lynch, why do folks like Warren Buffett and whatnot, why are they stock pickers? You got to ask yourselves this, right? Why are all those great investors stock pickers rather than not just throw it in an index fund? And the reason being is they understand that in order to succeed in the market, especially over the long term, if you've got the work ethic and time to put into this game, right, in the stomach as well, the brain as well, right, and understand when you're kind of being tricked and whatnot, right, into thinking things that you shouldn't be doing in the market, Why do they do that? They invest in individual stocks because of these sorts of opportunities, right? That aren't presented to index fund investors or something like that. And so in the past, you could just throw your money in an index fund and just get a certain return from that, right? But it's showing very different correlations now at this point in time. Look at a stock like Shopify over the last number of months. 71% gain versus a Dow Jones Industrial Average, 7% gain. It's a 10x there, right? Look at a stock like Salesforce. This is from when this one bottomed, I think it was back in December, right? 45% gain already on Salesforce in a matter of just a few months here, while the Dow Jones Industrial Average is down about 3% right now. Incredible. Look at Tesla Muscle. This is just a year to date for Tesla. Tesla's up 66% year to date. The Dow Jones Industrial Average is down almost 4% year to date. This is a stock picker's market. There's a haves and have-nots. Some stocks are going to do tremendously well, others aren't, right? Look at the difference between Tesla stock, for instance, and like a lot of these oil and gas stocks, right? Tesla stock got pummeled in 2022. Obviously, all Tesla investors got made fun of like, oh my God, you guys are losing all your money. Yeah, you're holding your bags, and all this stuff, right? And it's like, dude, we're up like 500% on the stock, 1,000% on the stock. Like, you call that holding bags? Okay, I guess that's holding bags. Gosh darn, I'm only up 700% on the stock now. Oh man, okay. If you look at a stock like Tesla, right, 66% gain year to date. Marathon Oil down 17% year to date. Apache, 66% gain for Tesla, 27% down for Apache. Incredible, right? Even a consistent beast of these companies, right, the oil and gas sector, Chevron, 12% down year to date. Tesla 66% gain at this point in time. Oil and gas investors were having a lot of laughs, especially the first 6 months of the year while growth stocks, tech stocks were getting pummeled, and oil and gas stocks were doing tremendous. But I can tell you, it's a different year, folks. In different years, different things happen. This is why it is so important to work with urgency in the market, okay? And there's a reason I got a picture of Chef Ramsay here in the kitchen. And the reason being is if you know anything about like working at like a high-end restaurant or something like that, right? It's a very high-stress environment. You got to work with urgency. The reason you have to work with urgency isn't just so you get your food out on time to customers, right? But it's because if you're really trying to cook great food, the difference between 30 seconds, 45 seconds of a steak being on the grill too long or a sauce marinating too long or whatever is going on, right? Could be the difference between that tasting unbelievably like 10 perfection and like a 7 or an 8 or something like that. And so if you're Applebee's, you can get away if you cook the steak for too long, or you cook the burger for too long, if you season it too much or too little. You can get away with that. It's Applebee's. No one freaking cares, okay? But I can tell you, at a Michelin star restaurant, for instance, and shout out to anybody who's ever eaten at a Michelin star restaurant, everything needs to be perfect. The timing has to be perfect. The flavors have to be perfect. The seasoning has to be perfect. If it's being cooked, it has to be cooked for a perfect amount of time. And so you have to work with extreme urgency. And the stock market's no different. You have to work with urgency or you miss incredible opportunities. And there was a lot of folks that chose to not work with urgency in the back half of 2022 when tech stocks were just getting pummeled, and look at the gains they've missed out on. So far, we haven't even entered a bull market yet. Wait till the next bull market. Do you know how much those stocks are going to be up in the future? Do you know what those stocks are going to be up from where they were at back in October, November, December versus where those stocks are going to be in 5 years from now? And yet people choose to not work with urgency. I'll take my time. I'll come back in a couple years. I'll do this. I'll do that. What are you doing? What are you doing, man? You're wasting time. You're wasting time not working with urgency in the market. It's incredible, man. And I can tell you, if you were a chef in the kitchen, you would have already been kicked out of this baby, okay? Because you aren't working with urgency in this market. You've got to take advantage, right? Something else shocking going on is check out the move in Bitcoin in the past 5 days. I know we don't talk a lot about Bitcoin or crypto on the channel, right? But I gotta say, when something extraordinary is kind of going on, you got to just take a peek up. Bitcoin's up 21.5% in the past 5 days. 5 days, okay? That's a massive move for Bitcoin there. That tells me that this market's getting ready to start going a little risk on. When you see the Nasdaq up 4.4% in a week, like it was this week, and then you see Bitcoin up 20-something% on a 5-day, that tells me the market is starting to get into actually a risk-on phase. Now, you might disagree with that in terms of it shouldn't be risk-on time yet, or agree with that or whatever, right? But the bottom line is the market's always playing 6, sometimes even 9 months in the future. And so I believe what the market's betting on now at this point in time, and it's just a starting phase here essentially, between what's going on with the Nasdaq stocks and what's going on with Bitcoin, is I believe the market's starting to be convinced that the Fed's pretty much done raising rates. They might raise 25 basis points and then they're done, or they might might not even raise and they're done. Okay. And therefore, the Fed's going to be in a position, especially if inflation comes down over this next 6 months, to actually start cutting rates if they choose to do so, right? And so therefore, from a risk appetite standpoint, you know, it would make sense that you're kind of positioning ahead of time, right? I also believe the market is starting to come to the belief of the assumption that earnings are going to improve as the year goes along, which is something I've been talking about for like a month or two now, right? Which is definitely how I see 2023 playing out in terms of earnings for a lot of the big companies that actually matter to the market, right? I think a lot of their profitabilities and EPS and net incomes are going to actually increase and get better and better and better as the year goes along. I think the second quarter will be better than the first quarter. I think third quarter will be better than the second quarter. And I think the fourth quarter will be better than the third quarter. I think it'll just continue to improve as the year goes along. And so based upon what I'm seeing in Bitcoin and Nasdaq prices, I believe there's some big money that believes exactly what I believe. And let's be clear about this. It's big money. You don't get Bitcoin to move up 20-something% in 5 days without big money coming in. You don't get all those Nasdaq stocks that have market caps of hundreds of billions of dollars, some even, trillion, multi-trillion dollar market caps, right? You don't get those stocks to move the way they were moving this week without big money coming in them. Let's be clear, most of retail's done out of the market. They have nothing to do with this, and they're not pushing around these sorts of stocks anyways. This is big money positioning, okay? And I think we're at the baby infant stage of this. And if things kind of correlate as the next couple months tick along, you'll see more and more risk on activity. And what you would start seeing next stage up would actually be a lot of those small caps that have been dogging out for the longest time, for like 18 months now. The next stage of that, which would really start hitting around April, would be those stocks start to move. We'll see if it happens, but if you're talking about going risk on, it starts with some of that, then it starts moving to some of these small caps, and then you kind of make your way up back into mids and then just general large caps, but that wouldn't be till like 2024 at that point in time. It's a process. Very similar to it's a process when you're in a crash in a bear market. It's a very similar process. And both feel very unnatural when they first happen. When a bear market first starts happening, people say, what? Earnings are great right now. Everything's great. It's great news. Why is stocks starting to go down? It doesn't make sense. Then all of a sudden, 6 months down the road, 9 months down the road, it's like, oh, I understand. Now I get it why stocks were going down, right? And so when you're starting to see these moves in a lot of these stocks, just understand there's certain things playing out in the future that you haven't unfortunately been able to see yet, but the folks that have been doing this a long, long time with a whole lot of money, they know how this game plays out. And so it feels uncomfortable when it's happening. It doesn't make sense when it's happening. Then time ticks on and it's like, they had this planned all along. Now I get it, right? And so that's just something I think very important to just kind of keep an eye on the pricing activity that's going on there, right? Now, what did I tell you guys going in this year? I told you if the index are going to fall, it's going to be the Dow, right? And the Nasdaq, I call this out a million times at the end of 2022 and at the beginning of this year, right? And people are like, why don't you buy, because I went to hedge my portfolios going in this year. How did I hedge? I hedged with SDow. Rather than hedge against something like the Qs, I hedged against the Dow. And the reason was Dow massively outperformed the Nasdaq in such an unnatural way last year. A lot of the Dow stocks very overvalued going into this year. And so I said, if the indexes are going to be weak, the real weakness is going to come from the Dow. And it's playing out 100% like I called out, right? You look at the Nasdaq's move, 15% versus a Dow's down almost 4% year to date. An extraordinary difference, but it makes 100% sense. And we're finally back to normal, right? Going in, I said this a million times, this is not going to be sustainable. Not sustainable at all, right? And I kept calling this out at the very end of 2022 and the beginning of this year. I said, this is not sustainable. This difference in correlation between where the Dow's at and the Nasdaq will not last. If you're in a down market, the Nasdaq's almost always going to do worse than the Dow Jones Industrial Average. But usually it's like 4 to maybe 7 percentage points, okay? We were talking about this is like 20 percentage point difference at some of these moments in the market. That's what? What are we talking about here? That's ridiculous. But now we are back to normal. Now we're back to a normalish range, right? And the Qs are almost always going to outperform the Dow on the upside when the market's good and you're in a bull market, okay? But Yeah, now look at the correlation over the past year. Now we're at about a 4% difference. We're back to normal. We're in a normal market environment now at this time, which is healthy, because I can tell you this was the furthest thing from healthy. The furthest thing from healthy was going on there, right? And the biggest last takeaway I want to give to folks out there is stay focused. You're going to hear a lot of talk about banks, about this, about that. It's all there to distract you from the real mission and goal at hand, which is taking advantage of great opportunities that are in the market and are going to continue to present themselves over this next 3 to 6 months. And you've got to take advantage of those. Work with urgencies. Last year, the growth stocks were all extremely discounted. That was, the fourth quarter of 2022 was like, I think the best time to be a tech stock buyer, especially for a lot of those big cap techs, that we've seen, honestly, since probably the great financial crisis, to be quite frank, right? And I think in 2023, we're getting such a tremendous opportunity in dividend stocks and value stocks. And I think 2023 represents probably the best year for a lot of those stocks to be a buyer of, probably since the great financial crisis as well. And so it's just 2 different years, 2 different opportunities in the market. And there's a reason I'm positioning into a lot of, let's just call it, dividend and value stocks this year, because that's where I got the buffet in front of me, okay? Growth stocks, I'm still buying a few here and there, but they're just not the opportunity they were in the fourth quarter of 2022. Those stocks had moved a lot. 50%, 100%, 100-something percent, right? And now a lot of these dividend stocks being beaten down, continue to be beaten down. That's where the real opportunity is, in my personal opinion. I'm just staying focused on the market, folks. You got to stay focused out there as well. If you've been investing for 10 minutes or 10 years, make sure you join us in the Patreon. That's to support the channel. And it also, you get access to see all the moves I'm making in there, exactly how I'm building out a portfolio. That is a must to join there. If you want to learn on a deeper level from me personally, and in the private stock group, the private wealth group, you want to apply to try to join us in there, then check out the description area. There'll be an application there. I appreciate everybody. Much love as always, and have a great day.